days sale for some of the classes. And the one I have is the art of short selling. Usually that means the market's going to rally that day, which is what it did. But the key in our room, which is the Chart Patterns Mastery Room, just keep in mind that I've been doing this 43 years. And the key in there is being able to adapt to the situations. So that experience is huge. So if something looks bearish, we short it. If it looks bullish, we buy it. Yesterday, we made money on the short side. Today, we made money in the long side. Every day changes, and you need to be able to pivot according to market conditions. So I saw more people in the Twitter sphere lose their butt yesterday being long. So you got to know how to play both sides of the market. That's number one. Number two in here is definitely, what do you see on the upper left? What has been moving the markets? What's been moving the markets? And I stress this and all that you should watch me on StockTwits. I put a ton of content on there. I'm not very good at the Barnum and Bailey promoting you see so much on Twitter. I'm more into content. So I like content. So I love to post content, and I think that's how I have almost 58,000 followers. So I would go and follow me there because I post a ton of stuff there. There. Now, I'm supposed to promote my site, and I'm pretty crappy at promotion. As most of you know, you hardly ever see me promote myself. But if you want to know, our track record has been in the all year, but let's just say in the last month, 80 to 90% winners. But the more important is our drawdowns are so tiny. It's not like you buy something, you lose 80%, you come out ahead after you sweat bullets. It's consistency, and it's 89 to 90% correct. So pretty good. I'll take that any day. That's how I did it on the floor. That's how I did it with the day trading firm. I grind it out. I don't do a lot of home runs. 80 to 90% though is not bad. And that's in up markets and down markets. So that's one thing. Now, if I want to talk about the art of short selling, what am I going to show you in here? Well, I'm going to show you why we got short yesterday. I'm going to show you patterns. So, it's called Chart Patterns Mastery for a reason. So I'll show you what we're talking about. So number one in here is one of my basic tenets. So I know markets go up, let's say 85% of the time in the long run. Also that markets are more likely to go up when companies are buying back stock. I've harped on that. I've showed a lot on StockTwits, and I'm happy to show it again. I'll show that in a minute. But one of the basic tenets is consolidation formations. I do not buy on the way down. I don't care. I don't buy on the way down. That's not how I trade. We buy on the way up after consolidation. Look at that. Where are you going to have your drawdown? You're going to have your drawdown if you buy on the way down. You buy on the way down. You buy on the way up. So I just can't stress that enough. Now, number one is consolidation formations. Number two is support and resistance, not with moving average. At least that's not how I do it. So on the way down, if I'm moving averages, don't work very well. On the way up, if you have a stock doing that, yeah, a moving average can act as support as it's in an uptrend. So definitely, I can see that. But getting back to it in here, I want to show you a perfect example on how we're short the TLT. We talk all the time about support and resistance. So this is a bear flag. It's also posted on StockTwits. This is a Brecher ledge, which is a bear flag when you can draw a horizontal trend line. Actually, somebody on StockTwits said, have you ever noticed that's a coincidence that it's got the same last name as you? So, yeah. But the point is, what do you notice here? There is no support underneath. So I watch more people try to bear flags or bull resistance or support. You can't do that. So, I mean, it just doesn't work as well. So, and I'll show you, you could look right now at the NASDAQ on an hourly chart. Could it be a bull flag? Sure, it could be a bull flag, but you need to wait for some of the overboughtness. I'm not, well, right now we're just going over overall patterns and not recommendations. But like I said in here, could that be a bull flag? Sure, it could be. Why did it stop? It stopped because of resistance. So it stopped because of resistance. So, and that's why it stopped. It was overbought. So it's how it works off the overbought. Hourly chart, same thing. Sure, it could get above that, but you have a ton of resistance. A bull flag at resistance when it's overbought is less likely to be chased or shouldn't be chased. So that's what I'm showing you. And like I said, I'm not stubbornly bullish on TLT, bearish. I was showing an example from yesterday. So that's all. Now, getting back to it in here, what else are we going to watch? Well, like I said, consolidation patterns. I'm really into consolidation patterns. Does everybody see the bull flag on the left? Yeah, there was no resistance. Why didn't this work? It was at resistance. So I'm just telling you, that stuff's a big deal. So consolidation patterns are a big deal. The other thing we do, and we do this a lot, is that you watch companion stocks and companion indexes. So when everybody and their mother was buying the SPX yesterday, when other indexes were getting trashed, we were shorting them. So let's show you what we're talking about. Number one, we use a lot of different indexes, and we use a lot of different, not a lot, but some indicators. So let me give you the indicators we've been using. These are the ones most funds use. You can use whatever makes you happy, but we use a 9 EMA, a 20 SMA, a 50 SMA, and we'll throw in a 200 if things are way out of whack from them. What I mean is if some index is way under it and some index is way over it. That's it. That's it. And the ATR trailing stop. On the MACD, I'm telling you, you can use what I use, which is a 3-10-16 simple. You can use an RSI. You can use any of them. Most of them are going to show you overbought and oversold. And the point that everybody gets wrong, overbought doesn't mean a thing. It's how it reacts to an overbought or oversold condition. An overbought in a downtrend, this is overbought in an uptrend. Overbought doesn't matter, except you want to see how it works off the overbought. Does it work it off by forming a bullish pattern? Well, it sure did. Look at that. Why did this one work and this one stuck? Because this was overbought at resistance. Resistance, believe it or not, it was a better buy above there because you had no resistance. So that's where the overbought matters because it can help with your initiation. But a lot of people get it wrong. They think when you're overbought, you have to go down. No, when you're overbought, you look for the consolidation pattern. On the downside, you're looking for the reversal pattern after it's overbought. So what's a reversal candle? Well, I showed everybody this for days. Is an indecision candle in a downtrend. So how am I determining a downtrend? I use two things for a day, not intraday. I'll use these in relation to each other. I'll show you what I mean in a minute. But if you take this out and you just shade them out, I'm just taking these two things, my overall trend, So right now you're in an uptrend, which means a bearish pattern is less likely to work. But right here was a whole different animal. So you're looking for that indecision or a run out of gas, so to speak, sort of like a rocket, and then it turns down. So you're under things and you got overbought. When it's overbought, that doesn't mean to blindly short it. It can go even higher. Maybe it goes to a new high. Yeah, you don't know. You wait for the reversal candle. So that's what you look for. And right there, you also saw it on an hourly chart. So the key is right now, everybody's trying to get bearish. You're still in an uptrend. There's a lot of danger signs, no doubt. There's a lot of danger signs. So, but what I would do there is I would look for either weak groups, or in the meantime, you can look for some strong things too. I mean, it doesn't hurt to look. But I want to show you some stuff. So number one, why on earth am I using a 9 EMA? I'll show you why. Because when I'm short-term trading, I'm looking at things in relation to each other. In a strong uptrend, you usually revert either to the 9 or the 20. That's all. Don't have to overanalyze it more than that. If I see other indexes blast through everything, then the probability is the SPX is going to at least kiss it. That's all. So like when you see MasterCard blow through the 20, the 9, then the probability was Visa was going to blow through the 9. That's all it means. So we go on probability. So yesterday we were short Visa up here. We were short betting on it, following the rest. And a lot of what you do, I'm telling you, it's not a holy grail. It takes a lot of work. So I see some people on our site come in at 9:29 and miss 29 minutes of content. That's not the way to do it. You know, that 29 minutes is a big deal. So it's not a holy grail where you come in 1 minute before the opening and you're like, oh, I'm going to make money today. There's a lot of things involved. But if I can do it and you can have consistent things to look at, you know, it helps. Also, if you see a clear-cut pattern, you can wait for those. So if you're in a slump, you wait for this. If you're in a slump, you look for a stock that is too extended relative to the rest of the group, and no matter how high the NASDAQ was going, it refused to go higher. There you go. So that was one. Number two, the other ones were starting to fill the China gap. Number three, it was acting terrible. And number four, it had a bear flag. So if you want to wait for those setups, that's great. You're going to miss stuff, no doubt about it. But on the other hand, you're not going to get yourself hosed by buying this here at 1 o'clock when the bond market was falling apart. Today, we were long it. Darn right. Why were we long? Because of support and resistance. It hit support. This line was posted before the opening. So does that mean to go crazy buying it? We were out. Why are you out? Because it's at resistance. Prior bottoms become resistance. Prior tops become support. Remember that. That's one of the basic things of trading. So as you see in here, once it got over that, there was nothing. So there's a time and a place to chase on the long side, a time and a place to chase on the downside. So that's what in here. And like I said, if you buy on the way up, well, let's put it this way. I love when somebody says this, because how many bought on the way down and lost about 400 points? You buy on the break. Sure, you missed the bottom. But if you bought here, you're gone from the business. I just can't be. I know that's ugly, but that's 800 points. If you buy on the way down, you lose your butt. Buy on the way down, you lose your butt. Buy when it starts turning. You don't get the bottom, but you get the direction. The key of longevity in this business is the direction. I've seen more people buy here because they don't want to miss it. Look at the difference. Look at the difference between buying here in a downtrend and buying here when it started to cross to the upside. So maybe it's only 400 points, but you're still in the game. If you buy here, you're gone. That's the way I look at it. So, and like I said, I don't buy at the bottom. I don't sell at the top. I buy direction. And that's the key to longevity and lack of drawdowns in this business. I just can't stress it enough. I watched more Twitter sphere buy here, buy here, buy here, and then give up here because they don't have any money left. You want to buy when you can be aggressive on the upside. So I just can't stress that enough. Now, talking about aggressive on the upside, now's not the time, I don't think. And let me show you why. Go and check out the China Gap. The China Gap is right here, May 12th, right here. Happened Sunday night, that China Gap. Yeah, right before, right after Marjorie Taylor Greene bought 50 stocks. Yeah, that's bless her heart. But the key in there is that gap. Just remember that gap. I'll take a 4-hour chart. All right, now look at MasterCard. Where's MasterCard? It filled the gap. Look at that. How about Capital One? Fill the gap. How about American Express? I mean, why the heck shouldn't they fill the gap when you still have tariffs? Maybe not as high. All of them have filled the gap. So the probability was a bearish pattern in Visa was more likely to work. Like I said, we're talking about all of this, not recommendations. Nothing like that. So not recommendations. I know everybody and their mother is buying bonds. I'm not even going to talk about them. I was showing a consolidation from yesterday. Like I said, this is about showing setups. That's all. In the long run, what do I think of the bond market? Well, I think it's in a big old bear market, but I thought it would rally today. Why? Because I've been showing the break of the 40-year uptrend for 2 years. We've been shorting every rally in bonds. But today, for some odd reason, everybody and their mother on Twitter is talking about we broke the 40-year uptrend. Well, that to me is a sign of the bottom when they're finally following everything I said a year ago. So theoretically, there's a big old bear flag, and it goes all the way to here eventually. Eventually, not now, but eventually. But with everybody bearish, you're probably going to get a bounce. But you had this where it was a buy all the way up, all the way at that trend line. So now here. So same thing. Yeah, would you have missed 50% of the move if you bought it? Well, you're gone if you bought on the way down. So if it gets over this, yeah, maybe it's a good buy. But I'm just telling you, we're into direction. We're into direction. And if I don't see a setup, I'm not taking it. The setup to me is playing the ES to fill the China gap. Yeah, that's unpopular. I know that's unpopular, but that's what I see. So if so many other indexes are filling this China gap right here. So you look at the rut, filled the China gap. How about the transports? Close to filling the gap. How about the Dow? That filled the gap. Then why am I going to chase the ES when it's up 20? So now, that being said, you also have to have the experience of buybacks. When did the secular bull market start? Where the market just trended up for years? In 1982. That is when buybacks were allowed. So even 1987, when the market crashed, even though the bond market was crashing, the stock market stayed up 2 more months. Why? Bless its heart, buybacks. So once the buyback blackout started, the market crashed. That's why October, so many times you see the market sell off because companies can't buy back stock. Or let's put it this way, 5 weeks prior to earnings, they voluntarily don't buy back stock. But the preponderance of S&P 500 companies don't buy back stock. That's why October and September are historically weaker than November. Because November, they start buying back the stock again. What that means to me, like I said, on the one hand, you have that I think you're going to fill the gap. On the other hand, you better wait for consolidation patterns. Well, heck, I don't know about you. That sure looks like a bear flag to me. Look at that. Do I want to buy anything when I see that? No. Do I think it can hold up more than normal? Yeah, because of buybacks. That's all. And that's what I'm seeing. So right now, if the Russell stays down and stays down here, as you see, it rallied to resistance, overbought at resistance. Yeah, and it stopped. If that doesn't get above this, so then it's closer to that China gap, then I have no idea why I'm going to chase the ES. That's the way I look at it. Just not going to chase the ES. Do I have to be long anything? No. We have put calendars in the SPX. We've had those for a long time. Just had them for a long time. That's what we're doing. So I'm watching Russell. I would watch the Russell. Like I said, the experience, the 43 years of experience can help you. And that doesn't mean you're going to make money, but our ideas have worked. So you might as well go with what's working, and that's working. So, if it's working, great. So in there. So what else are we watching? Well, I would go put up the Russell and I'd put it next to the ES. And you see the similarity in chart for an hourly. An hourly. If this fails, that's probably going to fail. Why else? Look at the resistance. Right there. There's your resistance. There's your resistance. If this gets rejected, that's more likely to get rejected. We go on probabilities. That's how we trade. So, you might say, oh, well, you missed 30% of the move. Yeah, but we got the move the correct direction. That's all that matters, is the correct direction. And if you want to make money in the long run, that's how to do it. As I'm telling you, if you do that martingale approach and buy something, then buy twice as much and buy twice as much, theoretically, if you have unlimited pockets, you'll come out ahead in the markets. But from where? Most people can't afford that. That's why, and me either. And that's why I like to buy direction. So definitely buy direction. So that's how we do it. And like I said, in here, is right now, what am I watching? I'm watching that Russell. You can even put it on a 15-minute chart. See the rejection of resistance? So if this gets rejected, this is more likely to get rejected. That's the way I look at it. So that's the way I look at it. And that's what we've seen. And so where are we going to go now? Well, I'll tell you, when I see this rejected, I look for the stocks that are acting the worst. And those are the ones I'll look at to short at least intraday. That's all. So Microsoft stopped going up. So APP acted like dirt all day. So if you're going to short, go and check this out. Go on relative strength and weakness and charts. So if you're taking, give me a second. So sometimes you get some bandwidth issues, dual broadcasting or triple broadcasting, which I'm getting now. Which means I'm going to have to reset Thinkorswim. So I apologize. But the point is that if you see the Russell selling off, then you short the stocks that are acting the worst. You don't do the hope stage and buy the ones because it's a theme stock. And that's what's been working for us. So I'll just show you. Let's see if I can get this to work right. All right. So here is the mini Russell. I'm telling you to key off of that. We're watching the S&P on the right fail at resistance. Were there stocks that were acting terrible while the market was going up? Yeah. This was going up, that was going down. If that sells off, theoretically that leads. That's the way I look at it. That's how I look at it. So if this stops going up, that's going down. If this goes up, it was going down anyway. So that's one way to look at it. So what else are we looking at in here? Well, I'll show you. Relative strength and weakness, correlated indexes, correlated stocks. If I am playing Visa, I'm going to play it against the rest of the banks. We broke even in Visa today. We did great yesterday, but we broke even because the correlated stocks started rallying big. Even though I think longer term it's going down. Longer term, I think it's going down because I think it's going to fill the China gap. If Goldman Sachs goes down, if JP Morgan goes down, if the most expensive in the group, that's one thing I teach in the art of short selling. And what I see in there is that correlated indexes take the most expensive stock in the group. If this is rallying, then this is less likely to break down. So if this starts selling off, just take the most expensive. So with JP Morgan, you take Goldman Sachs. With Visa, you take MasterCard. Well, how about with the chips? Well, they all have their own thing going on. But if you see all of these start selling off, which you're seeing, what makes you think the NASDAQ is going to break up? What's made the NASDAQ go up lately? It's been the chips. So if they act bad, well, then you don't buy the NASDAQ. I haven't even looked, but I bet the NASDAQ is sold off. Let's see. Yeah, there you go. NASDAQ sold off. Chips sell off. They led the market up. And now they're leading the market down. So if the Russell's going down, which it is, and like I said, you might say, well, but the bonds are rallying. Why is the market rallying? Because the bonds are sold off for so many days in a row, and the ES is near a new high. Bonds are here. Yields. This is at a new low for the year. And this is something I posted on StockTwits before. This is May 1st. 50-50 by next week are going to have to buy bonds and sell stocks because the indexes have gone up about 280 points. And first, this has gone down 6 points. So that's why the bonds aren't going to matter right now. They're down so much that the funds have to sell stocks and buy bonds. So bonds are important in the holistic approach. They sell off now, this will go down even more. But that's how I look at it. 50-50 funds. I'm happy to post this. This was posted yesterday before the market sold off. There you go. Now, what's going for the market is buybacks. So let me show you that chart. This was also on StockTwits and in our room ad nauseum. So you might say, well, funds have to sell stocks. The market's going to get nailed. Yeah, but overall, this happens. When companies can buy back stock, even if funds are selling, they might stay up longer than you imagine. So what I mean by that is if you do a cycle, you notice November went up, you notice August went up, right here, just take when Apple approximately does their earnings. They start buying back stock after earnings, theoretically. That between that and when JP Morgan starts reporting. So if JP Morgan reports in July, then the buyback blackout starts theoretically, let's say the end of June. And in here, it just means that bearish news is more likely to work. A rebalance is more likely to work on the downside because companies aren't holding up the markets. Right now, let me show you when the buyback is. I think I can do this with cycles. Let me see. So all I do is I take Apple and I take JP Morgan. JP Morgan reports around July 14th. So 35 days. That's about June 20th. You just take this. And it's not perfect. It's not a holy grail. I just can't stress that enough. So you take about June 20th, right in here. Then you take when Apple's earnings, which are about August 1st. That's your next buyback out area right there. So you had one here. So it doesn't mean markets can't go down, but it means that they go down fast when companies can't prop it up. That's the way I've looked at it. So that's next, but you still have that gap. Still have that gap. That's why I look for ideas on rallies because of that, because the Russell is here. So even when, and you might say, well, why is the Russell underperforming? And I know you're going to say because the yields have gone up, small caps don't do as well. Well, that's true, but it's also because they have lack of buy. So the Russell is going to theoretically not act as well. So just want you to know that. But I'll show you what I think, and I know a number of you have seen this for a long time now. So let me show you what we're talking about. We're talking about this, the sentiment cycle. And like I said, at buybacks, maybe you fill the gap. Like I said, I think you do. But I'm going to be a lot more swing short oriented on the downside when companies aren't buying back. All right, see this sentiment cycle? Yeah, you know all the enthusiasm here where everybody bought on the way down, got bailed out, and then they're gone from the business here. Sorry to be ugly, but you got to respect the markets. I think a lot of people don't. Remember, 90 to 95% of day traders lose money, but 90 to 95% of the Twitter sphere says that they're geniuses, individual sites. There's some disconnect. And one of them is consistency. But see this right here? You have the panic sell-off followed by the reversal. That's what we got. You get the futz around. Now you might say, yeah, but the markets are up here. That's buyback influence. So when you take this, then go look at the Russell. The Russell looks a lot more similar with that D and F, that G, the consolidation, the panic, and then the futz around testing that area. That's all you're doing right here. Exactly the same thing. Like buybacks are skewing to the upside, but I wouldn't chase rallies. Unless you get massive positive divergence, I wouldn't chase rallies. That's how I look at it. And that's where we are right now. So you look for the short ideas. Overbought at resistance, you look for the reversal candle or the cross of the ATR trailing stop ultra short term. And that's what worked today. So that's what worked. So, I mean, you're talking about you make 25 points in the SPX and everybody will buy bonds. I don't get it. So I'm just telling you that this kind of thing worked. So then you might ask, well, what happened to Visa? Did Visa go down when the market sold off? Yeah, not much, but it went down. Now, why were we playing it with put flies instead of just buying puts? Number one, I hate buying premium. That's what the amateurs do. The pros buy spreads or sell premium. That's how you make money in the long run. So what would you do in here? You buy spreads under the market. So because it's probably not going to go down fast because of buybacks. And I'll show you what we're talking about. Go into tip ranks. Believe it or not, tip ranks shows this. And I'll show you what we're talking about. This is free. I haven't even logged in. You'll see. And go check out the amount of buybacks in Apple. So now, one thing of why I'm obsessing about buybacks now as opposed to, let's say, last year, is there were all these new news headlines that companies are expecting $5 billion buyback spree. That's why buybacks are more important now than they were. But look how much Apple's bought back, $25 billion. All right, go in here because I can't figure out how else to do it. So I just put Visa. Huge buyback, $4 billion. Now go into here. This is free. I mean, I'm not even logged in. Go put in Capital One. 300 million, nothing. So which one do you think is underperforming? Yeah, Capital One. Isn't that amazing? It's not a coincidence that Visa's outperforming because Visa's buying back more stock relative to their market cap. So something to keep in mind. So if you had a credit card that didn't have any buybacks, yeah, that would be even more powerful. But it's amazing how that works. So just want to show you that. So the more that I'm just telling you that that's how we make money in the long run. We make money by selling premium or doing spreads to take advantage of market direction. That's all we're doing. So that's what we're doing. I was trying to get you up American Express, but tip rank stopped working. They must know I'm doing it. So, but the key in there is definitely that when you have bucks, but you have a stock that's far outperforming, you got to play it with spreads. If they didn't have any buybacks and you saw a bear flag, I'd buy put debit spreads. I see something that has a big buyback, but it's outperforming the rest of the group, I do it as buys. So there are a time to be aggressive and a time not to. That's how I look at it. So the thing I'm watching. Now, you might ask about Microsoft. Microsoft, great chart. We were short it. We lost money in it barely, but we made money in TEM to pay for it. We got a Microsoft, took a small loss. We bought one put fly, we bought another. So we took a small loss, but we made it in everything else. So when I saw it act poorly when the ES went to a new high, I was going to get back in, but I was getting in here and I didn't have time to post in the room. But relative strength and weakness. So what were you watching? We were watching that Microsoft refused to go higher when the whole market was going higher. So that would be one. Or you play Visa. So just want to show you that. That's what we were doing. So getting back to it. What else are you going to do? Well, like I said, you still have that stupid buyback stuff, but you also have that the ES hasn't reached its lower objective. I can't stress that enough. The ES, to me, has not reached its lower objective. To me, the objective is here. And when you look at a number of other indexes, they've gone to it. China gap, right there. Right there. China gap, China gap. This is that gap. How about the Dow? Now the Dow's at the China gap. How about the transports? They're close. They're not there yet. Close. They're at the bottom of that wick. If you go and put over here, you'll see this has filled it. SPX isn't close to the bottom of the wick. That's about 57.50. That's what I'm looking for. So sorry if you're a perma bull, but when I watch correlated indexes going down, I can't chase strength. That's where I am. And you could take this in a different way. Take some correlated world indexes. Like I said, I don't care about Bitcoin. Bitcoin's gone up. Stock market had gone up. I don't figure that's a good correlation, but it is a bull flag and a bull flag if you were playing it. So getting back to it though, how about the China market? I mean the Japanese market. Well, it filled the China gap. Look at that. So that's why I look for short ideas until the S&P fills that. That's the way I look at it. Like I said, bonds don't matter right now. You're going, in fact, uptick. It could be bearish for the markets because it shows that funds are now to buy bonds and sell stocks. I would not use the bonds as your tell today to buy the markets. That's the way I look at it. So right now, what are we doing? Well, I'd like to get back in Microsoft. I'd like to get back in Visa. Like I said, I wasn't going to do a trade if I can't post it for our room. But I would do something. Now, here's an one for you. A lot of you know I look at correlated indexes. I also look at, a lot of you know, we've had a tremendous amount of success in Generac. So playing it in hurricane season, you play it after their May earnings. It's worked really well. But I wanted to buy it. But when I watch Home Depot doing that, I cannot in good conscience buy Generac yet. That's the problem. And Home Depot has a buyback that's acting like dirt. How about Lowe's? Act like dirt. So to me, the home improvement. So if these are falling apart, I just can't chase strength in Generac. So stay tuned, Chart Patterns Mastery. I'm sure I'll do something, but I'm not doing it yet. So, and if you want to know, believe it or not, just go to YouTube and go to Mr. Weatherman. There. If you want to see things I look at that really help with Generac, just do what analysts are doing. Not over here, not in the Pacific. Sorry about that, my friends in California. They about the Atlantic. That's what we're watching. It's not much yet, but I'm just telling you, we've seen now, you know, I lived in South Florida a long time and grew up in North Florida. Just keep in mind about this and keep in mind that it does work in the long run. That's just a creative trade for you. Like I said, experience really matters in this business. It might not matter for, you know, a week when the market's going by as a genius, but on the way down, we made money. We made money both ways. So that's something to keep, you know, thinking about. So next thing, what do we do today? Well, today, I think you have the bonds up, which helps. The Russell's not crashing, which helps. And you have buybacks helping. So it's real possible the market doesn't do a darn thing today. All it did was get overbought at resistance, and now it's going to get oversold at support. Probably going to be stuck in the zone today. That's how it looks to me. So I don't think you're going to see a lot in here. Now, if I go away from the desk, so if I go and do an errand, I guarantee something will happen. It just always does. But theoretically, I'm not doing a lot in here. I'm not doing a lot because the buybacks, which could make it go up, but the divergence in a lot of indexes, which can make it not go up. So that's the way I look at it. That's the way I look at it. It's just not there at the moment. And like I said, I can't stress enough what the fund managers use. I would say 80% of fund managers and trading desks use a 9 EMA, a 20 SMA, a 50 SMA. And like I said, I'll use a 200 in relation to each other. What am I talking about? If I go to a weekly chart and you put up a 200 of the S&P, it's up here. On the other hand, the Russell on a 200 down here. It's had a little bit of a rally, but if it gets under that, another 40 points, then to me, probability after buyback blackout, when it starts again, the buyback blackout, the probability is this trends toward that again. That's when I use the 200. So that's when I use it. How about the transports? They're at the 200, but they've rejected. If it gets back above it, then maybe the ES can try to test new highs. But if this starts filling that far under the 200, then to me, the ES is more likely to trend to the 200. It's worked for a long time. Not now. Like I said, buybacks are a big deal. That's when I use the 200. How about on a daily? Do I use the 200? Not really. We use it in relation to each other. If it first kisses it after the first sell-off, we'll look for that reversal pattern because you don't know when it's going to stop. So that's one thing. Now, I want to show you something else if I can get it to work. I want to show you on demand, get it to work, like I said. And what I want to show you is when we were overbought in a downtrend, I'm talking about earlier this year. How do you initiate a short? That's what everybody wants to say. Like I said, I am not shorting in here when there are buybacks, but I'm not chasing upward. I understand doing neutral today. Totally understand that. But I want to show you, I have 13 minutes to show initiation when you were overbought in a downtrend. So let's go to it. A second for it to build. All right. So here's what I was showing you. So indecision candle like that is called a doji. Now you might say, well, there are dojis here, and it followed through to Chris. You talk about the follow through. The problem is the sell signal is not as good when it's in an uptrend and buyback time. So here wasn't buyback time. So you got overbought with an indecision candle through to the downside. That was a key short, which we were short. So let's go to that day. We're going to go to 327. We're going to use the rewind function on things. And like I said, a lot of this is experience. You know, if you've been doing it 1 or 2 years, you know, there are a lot of things you see over 43 years, whether it's tariffs, whether it's pretzel stuff, whether it's a recession, you know, it helps to have that experience. So, in here, and I think my clients will so getting back to it, March 27th, let's go to on demand, the rewind function. So we're going to go to March 27th of this year. March 28th. Did the hourly chart tip off about a sell-off? It sure did. So you see the doji right here, right there. Now I see an indecision candle. I'm looking to initiate a short on any cross of something. So I can take everything on the right other than the ATR trailing stop. Intraday, like an hourly, I use the ATR trailing stop. So when you got over, as you see on the bottom, you're looking for the trigger to short. In fact, you got an indecision candle with a follow through. Did you sell the top? No. You don't know if it's going to here first. Know the direction. So did you sell at 57.85? No. Did you sell at 57.45? Yeah. Did you make 300 points? You sure did. So I'm just telling you, that I look at cross. You can there even put it on a 1 hour and a 15-minute. What do you see in here? That top in my book, that's a bear flag in my book. That's a bear flag. Look at that. So on the way down, there were bear flags all the way down, all the way down. So now you might say, well, this one was a bear right here. There was no support on the way down. Where was the support? Prior tops. Right there. There's your prior tops. So, and it stopped there. Once that broke, the next support is here. Well, I blew through that pretty quick. The key was the indecision candle when it was overbought in a downtrend. The downtrend moving average or the ATR trailing stop, either. So you'd say, well, it worked up here. Yeah, it worked. It also worked, but I'd rather take the setup when it's under something. Now, we do play another kind of way, a reversion trade. If we see an indecision candle and you're too far from the 50 moving average or the 20, we'll play it to the 20. That's sort of going against the grain, but we'll do that, which makes you wonder about now. Are you too far from things? You sure were. That's why we were short right here. So it was too far from the 20. It's healthy for it to catch up. That's all I'm saying. So on the right, if you take, let's say, the rut, so 2000, did it go to the 50 moving average? Well, I'll show you. As you see, it went to the 20, which made it more likely that these were going to gravitate down. Doesn't mean they're going to it because they have all those buybacks. It's going to gravitate to it. And that's why we look for short ideas. The problem is, like I said, shorts are truncated at buyback time. That's the way I look at it. So you got to just pick your spots. And that's all we're doing. Like I said, I'm not shorting here. I'm not buying here. We're just not doing anything here. You know, lunchtime. But to me, buybacks do matter. I just can't chase the strength everybody wants. That's all. And thanks for saying that, Frederico. I appreciate it. But like I said, I don't have a lot of positions on now. We took our profit. We were long this. We lost in here, but very little. Very little. And we made in most other things. And that's what we were doing. Now, that being said, I just said that if the market was up, you look for what refuses to go up. Works the other way too. I'm not a perma bear whatsoever. So when the NASDAQ was doing this on a 2-minute chart, what wasn't going down? That wasn't going down. Yeah. So you play the thing that was acting the best. So, I mean, that's what we do, relative strength and weakness. When did that cross the ATR trailing stop? At 312. When did this start rallying? 320. I mean, 1320. So, and Sam, thanks for saying that. But I'm telling you, you know, I watch your stuff. You're really good at this. And I appreciate all the stuff you show me and the stuff you show in the rooms. So thank you, Sam. I mean, really like your ideas. I just want to give you a shout out. But I like your ideas, no doubt. So, and in here. But getting back to it. Once this stopped going down at support, you look for what acted the best. So did you buy the bottom? No. Did you buy the consolidation? Yes. So I just want you to realize that once it hits support, sure, you could look for what refuses to go down. So TEM worked. What else did refuse to go down? Well, let's see. Well, your Tesla. Tesla acted great. All day it's acted great. So when I don't know about you, but it seemed like when the NASDAQ was selling off, this retained its bullish structure. Yeah, it acted great. So even though this failed and sold off about 80 points, this retained a bullish structure. So if I'm buying a Tesla. Not the car, the stock. So what else acted well? Well, believe it or not, a big buyback stock. Yeah. So what happened? This sold off. Visa refused to go lower. If this rallied, Visa was going to bounce. And it also had a bull flag. So I hope you find that helpful. Like I said, what do you do now? Well, like I said, on the one hand, you have the bonds at least aren't crashing. Yeah, the advanced decline is 0. You have individual stocks acting okay. You have the advanced decline making a higher low. So I don't see the trade on the downside. I don't see the trade on the upside. This is a neutral kind of day. Now, you might say, look at your up list. So did some of these go up before the markets? Carvana. Nah, that's a little sloppy. I guess you could say that was that. That's a little sloppy. How Cyberonics? Yeah, there you go. It refused to go lower. In fact, now it's thin, but at least you had a bull flag. The markets rallied. So that bull flag was more likely to work if the market stabilized. And it did. Pretty cool. So I want to show you all the things I look at in here. We go over these all the time in the Chart Patterns Mastery Room. And like I said, I knew we'd rally if I showed about the art of selling short. And when we talk about the art of selling short, it's not a perma bear. It's opportunistic. If you see a defined short pattern, you play it. Did I play IBM? Did it have a defined short pattern here? Yeah. Was blackout here? Yeah. Did it have a top here? Yeah, but that was earnings. That's not fair. But that's not as clear cut. So how about Apple? Now that's a tough one because it's in the buy. They can buy back stock. It just has bad news. So I don't see a play in there. Now you might say, why do you have that arrow there? Because a pattern at support is not to be trusted. That's all. A bearish pattern when they can buy back stock is not to be trusted. So there are a lot of combinations of stuff. But number one, if you're going to play the short side, try to see support and resistance. And try to see if there's lack of support on the way down. Now in the markets, you got buybacks. You don't trust shorts, and we didn't. We play them quickly. The whole point is, if you're going to play a Visa to the downside when it has a massive buyback, you just can't play it today when it refuses to go lower. And the rest of the group that I was keen off of as short ideas are going up. I was using those as my tells. So I hope it helps. I hope you find it enlightening, and try to, I think we have a trial in the Chart Patterns Mastery. Try it out. Take care.